And welcome out to the halftime report here at Tackle Trading. It is April 25th, 2019. And this is actually the second time we launched because a second ago we were just talking to ourselves for 3 minutes because it failed to go live. But we're glad you're out. Halftime crew, thanks for showing up. Matt, Mark, how are y'all doing today?
I'm doing better than your ability to execute going live on YouTube.
Hey, that was a connection failed. And I don't have Comcast, so I don't know what we're shorting.
Oh, well, we're not shorting Comcast today. They might sell their 30% stake in Hulu to Disney, who's on fire today. There's no doubt about that. So I'm doing better than I would say, like I was saying it earlier. I'm doing better today than UPS, 3M, and Tesla. Not as good as Lam Research, and Microsoft. And throw Disney into that as well. Disney's just on fire.
Oh, Disney's a juggernaut right now. Mark, how are you doing?
You know, that is the third time you've asked me how I'm doing.
You hadn't answered yet. I just wanted to put.
I do not respond to automated salutation. See, the first time you asked me, you didn't even follow up.
Salutation. It's automation. Salutation.
I do not like automation and salutation.
So, I could watch Mark and Cody fight for the next hour.
How you doing, Mark? I don't really care, but I'm saying it just to put out some pleasantries because that's what we're supposed to do in society.
Such a hater.
I respond to sincerity.
You don't know that. What if I really care about your well-being right now?
You live in Hawaii, you have a beautiful wife, you have a great life. You don't give two shits about.
Well, that's a way to get this tackle trading halftime report kicked off. I like it.
Well, I can tell you what I do care about. I do care about the market.
Yeah, I buy that. I buy that. And let's talk about Tesla. Let's get talk. We're at a big, huge support area on Tesla right now. Like battling a major support level that's been tested multiple times going back to the early parts of 2018.
I'm going to make this statement right now. I have no clue why Tesla's not down 10, 15%. I really don't.
With their earnings they had
was god awful. I mean, just absolutely horrific. Tesla comes in with an expectation of losing 75 cents per share. They actually lost $2.90 per share, ladies and gentlemen. They came in at $4.5 billion in revenue. They were expecting $6.2 billion in revenue. That is an absolute just horrific miss. Many analysts that I was reading this morning expect Tesla by the third quarter of this year to have to, borrow up to about $2.5 billion more in debt just to kind of keep their levels of production that they're, looking to continue. And obviously, Tesla's down 3.3% today, 8.7 points on the day. And Mark, let's take a deep dive here because we've talked about this 250 level a tremendous amount. You are now piercing that 250 level right there. How would you approach it if you saw Tesla break 250 today?
Breaks of long-term support are tricky. How I like to play them is off an hourly chart. So on a bigger time frame, weekly chart, a daily chart, we identify those levels. And we're like, wow, this is a massive support level. So whether it's Tesla or any other stock that you could possibly be looking at, we've identified a major support area. All right. We have a lot of room to the downside. We don't have anything in the form of horizontal or moving average support below this level. So as traders, we say, whether it's Tesla or any other stock, we're like, this could be a very profitable opportunity. What I like to do is I like to approach this from a very short-term basis and try to play looking for maybe a home run, but I approach it from kind of a day trading, short-term swing trading mentality. And sometimes you can just catch a huge runner. So I go to an intraday chart. And what I ideally would like to see is some level of intraday support break and then play the break of that support. So let's say it trades sideways for a couple days or 6 or 7 hours or whatever it may be. And then you have a breakdown of that level. That's how I like to play these breaks of long-term major support because you have to respect the long-term support. I mean, it's there. It's been tested. It's been tried multiple times over multiple months. I mean, this goes back clear to the start of 2018. So there's certainly opportunity, But knowing how you play a breakdown in this situation can be very profitable, but you got to have some kind of rules, some kind of techniques, and that's how I personally like to do it.
Yeah, there's a lot of ways to play this this breakdown on Tesla, and Tesla is really kind of tough because it's a very volatile type company. It can snap back in literally in a heartbeat. But I see this potential break, and it's on the backs of a very, very negative earnings reports. Like I said, just reading the earnings report and listening to it yesterday, I was not impressed in any capacity with what I saw out of Tesla yesterday. It wasn't just their negative numbers, guys. They delayed the announcement. They delayed their announcement on their earnings last night by about 30 minutes. And so while everybody's waiting for that conference call to start and for Tesla to release their numbers, everybody's like, oh my God. I mean, I can just tell you what I was thinking when it was happening. I was like, come on, Elon. Every minute you wait, every trader's like, this isn't good. This is not good. This cannot be good. And it wasn't. I mean, their earnings numbers. I mean, guys, and I get it. There's a lot of fanboys of Tesla out there. There's a lot of fanboys of Elon Musk out there. But you got to look at the numbers behind it, and the numbers were just devastating for.
It's just not the numbers. The whole company is terribly run. You've seen this, and not so anecdotal evidence all year. When they tried to roll out with their online strategy of, hey, we're going to do all of our cars online, only to walk that back a few days later. They are going back and forth.
Their pricing model on their Model S. I mean, their pricing model on the $35,000 car costs $14,000. It makes no sense.
There is nothing over the last 6 months on this company that would say, hey, these guys are stable and have a brilliant plan and are executing it. It is exactly the opposite. Now, I've been negative on Tesla for going back. I don't like companies that don't make money, and I certainly do not like the management style that Tesla has shown. But the last 6 months has been a disaster.
Criteria for you? The companies need to make money. The company should be well run. That's something you look for?
I know, call me old-fashioned.
Yeah,
call me old-fashioned. And then the numbers, when you have the numbers back it up on top of all of this other, not good.
No, it's not good. And Mark, I mean, you're talking about an environment in the last 4 months, especially to start this year. You're talking about an environment that was bullish euphoria, with the S&P up 16%, the Dow up 15%, the NASDAQ up 21%. I mean, the Russell up 17%. You're talking about a historic snapback rally. And in that historic snapback rally, here's a company that there's a lot of people that love, and there, other people that don't. But you have a marketplace that has been going down, 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 down. You have an extremely consistent bearish trend line on the daily chart. As you can see, I just drew it here. Look at the consistency factor there. You come up into resistance, you come up into resistance, you come up into resistance, and you're all the while you're just pressing down, and that's putting a lot of pressure on the downside movement. And then eventually, and we've seen this 250 level get hit so much, but I've given the analogy a lot, guys. It's like when you're hitting support or resistance and you hit it over and over and over and over again, it's a positive at first, but then as it continually gets tested, it's like you're in the corner with Mike Tyson, and Mike Tyson's just welling on you over and over and over again. You're eventually going to get broken, and you're eventually going to go down. And that's what we're seeing on Tesla today. We're seeing a tremendous downtrend over the course of the last 3-4 months, despite the market going up, 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 up. You're seeing on the backs of a very negative earnings report, and now you're punching down into that 250 level of support. Now, the buyers of Tesla, they are going to fight for 250. It's going to be a battle.
It's going to be a battle.
It's going to be a battle. And it's not for the faint of heart. It's not. It's not for the faint of heart, because it's going to be a battle and it's going to be volatile. But for me, if I get a close underneath 250 and I get a confirmation underneath the low the next day, that's a shortable trade for me. Absolutely, 100%. And it'll be the first time I've shorted Tesla maybe in my life. I don't think I've ever shorted Tesla.
I've always short Tesla in my heart.
I short Tesla when they get above 350. Is when I start looking to short Tesla.
I can't stand about Elon Musk, one of many things, is like he makes several comments. Like, the only reason Tesla goes down in price is because of short sellers.
That's not true.
Not what's occurring.
No.
People have lost faith. not in the vision, because I think everybody here, I am a huge pro-environmental guy, like huge, absolutely massive. I think we should absolutely do things as a society with our children, our grandchildren, and future generations in mind. So I love the vision, but the execution is terrible. You know,
but Tesla doesn't own the rights to the best environmental company out there. That's Google. So I mean, I know Elon likes to tout that, but again, you know, it to me, I was one of those fanboys up until August 8th of last year, and then when he did everything with the 420 and the fake buyout and the Saudis coming into buying, and he was just trying to hurt the short sellers, but short interest, Tim. I mean, Mark, short sellers, we haven't seen that go up. This is a value problem.
This is a value problem,
not a short interest
problem. Faith problem. This is not short sellers driving the price down.
You're talking about a growth company that is struggling with that capacity. So it's going to be interesting to watch how 250 performs on Tesla. There's no doubt about that. But outside of Tesla, we did have some other earnings we got to get through very quickly. Mark, Facebook's earnings. Let me give you the numbers here and give you your reaction. Facebook's numbers came in with the expectation of 1.66 on earnings per share. It came in at 85 cents, so a big miss on earnings per share. Revenue came in at 15 billion versus the 15.1 billion versus the 15 billion that was expected, so a slight beat on revenue. Guidance came, not guidance, but year-over-year revenues increased by 20%. Now, guys, in Facebook's corporate life since Facebook is created, that's actually the smallest year-over-year increase in revenue Facebook's ever had, which is quite astonishing, to be honest with you. It grew at 20%, and yet in the last 10 years, that's the lowest it's grown. That's quite amazing, to be perfectly honest with you. The subscriber growth, and that's kind of the concern with a lot of Facebook investors, subscriber activity actually has shown an increase, and that's kind of why we saw the positive response on Facebook. And you're gapped up into 200. How do you read this gap, Mark?
Well, I mean, coming in, I mean, anyone that's listened to me on our pro level product anywhere over the last year, sign up for a 15-day free trial because we give good, valuable advice. I've always been pro Facebook. And why have I been pro Facebook? For the same reasons that I'm anti-Tesla. They make money. You know, you might not like Mark Zuckerberg. I don't really like him. Who likes Mark Zuckerberg?
He's a zombie.
Nobody likes him.
Nobody does.
But Facebook makes money. Facebook makes money. And in all of the negativity over the last year, like, you have to understand the company. What is the driving force of this company and its subscribers? Whether it's Twitter, whether it's Facebook, whether it's Netflix, that is the primary metric investors look at. Mm-hmm. Subscribers haven't been hit in all the negativity. Facebook is almost like a utility now. It is ingrained in people's lives. Mark Zuckerberg can go act a fool all he wants. He can go be the dark Sith Lord all he wants. People still want to communicate with their cousins and with their family members and their friends in Nebraska, and Facebook is a part of their life. They just, whatever else is going on in the shenanigans of management, people don't care. They want to like that cat video that their cousin sends them.
Well, and that's what we saw in their subscriber data, Mark, is that, and a lot of the people's concern, my concern, was all the negativity around Facebook and Zuckerberg over the last year. The political negativity, the Russian negativity, the third party data and the privacy concerns with Facebook, and how would this impact people's overall utilization of Facebook. And sometimes it's very difficult to step away from it, because I am not a fan of Facebook. I am not a fan of what they've done politically. I am not a fan of what they've done with third party apps and given our information, and just, I'm not a fan of all of that. And so sometimes it's hard to remove that bias from that and simply look at the numbers. And if you simply look at the numbers, you got to be impressed with what Facebook did yesterday. Maybe not from an earnings per share, but the question that was answered for me, at least, was they have not lost the demand of their client base. And that was very, very important. We prepped an inverted butterfly. Gino and myself on the Tuesday Coaches Show prepped an inverted butterfly as well as a Debicon on Facebook. And I just want to ask for the pro members out there that were in the Coaches Show on Tuesday, how'd that work out today, guys? How'd you feel when you were practicing that trade, either through the Debicon or the inverted fly? Because the analysis, guys, was pretty spot on from that coach's show with where we were putting our strike prices on the Debicon versus the inverted butterfly. So I hope you guys got some really, really good practice as you're going through that. And how was it? Was it good, Linda? Felt good, Keith? Went well for you? Good.
We have quite a few happy students that visited that show.
Yeah, it was,
and I will maintain it. The only reason you should not subscribe to the pro product is because you don't like money. It is literally the only reason you should not be a pro member. Between the trade advice and the practical advice and just learning how to trade in general, let's forget the education element.
Yeah.
Do you think pro members that placed that trade that you and Gino outlined on Tuesday night made their $97 for the month? I think that would be a resounding yes. The pro product, while we're not prophets, while we don't bat 100%, stuff like Gino and Matt I listened to every second in the background of the coach's show on Tuesday night. And I was like, that's a good trade. That's a good trade. And it certainly played out that way.
Well, and I placed 2 earnings trades last night. I did the inverted fly on Facebook, and I'm out of that trade right now. And I did the iron condor that we were looking at from the coach's show. Not the coach's show, but from the halftime report yesterday. Did the condor on Tesla, and I'm looking to unwind that right now if it does close underneath 250. But the analysis, I'll tell you what. When I saw the numbers on Tesla, I'm gonna tell you right now, I thought my condor was going to get slaughtered. And I was 70 points out of the money. That's how concerned I was. And then I went to look at the price action overnight. I'm like, oh my God, are you kidding me? It was basically a doji on the overnight action. And so, sometimes you just get lucky based on the market response to what you see in the market. But both of them were really good trades. And both of them, I hope that the pro members got a lot of practice on those trades, because if you can start to understand volatility. I was talking to Tim before Tim got on his flight to Houston. And he's like, you know what? Delta and Theta are amazing, Matt. And I know that's your core. But if you understand Vega during earnings season, you always have a trade for the day. You always do, every single day. You had earnings trades on Facebook, Microsoft, Tesla, CMG, Lam Research, 3M, Altria Group were all potential earnings trades yesterday. And tonight, and we'll look at this a little bit more in depth here in just a little bit. But tonight you got Amazon and you got Intel and you got Starbucks on tap tonight, and then you have ExxonMobil for Friday morning and Chevron for Friday morning. So there's always an opportunity in the market if you understand the different strategies that you can apply in the marketplace itself. Looking at the one I talked about this a little bit yesterday, and Microsoft is kind of the unheralded of those FANG stocks. Sometimes it can be put to the back burner when you're talking Amazon, Facebook, Apple, Google. And when you look at Microsoft, though, let's give Microsoft a nice good old golf clap, ladies and gentlemen. Hit $1 trillion market cap for the first time and it won't last. Maybe it won't. No, it won't last.
No, none of them lasted initially.
Number one market cap,
come back.
the number one market cap company in the United States right now, that is Microsoft. Microsoft reports earnings 1.14 per earnings per share versus the expectation of 1. The revenue came in at $30.6 billion versus the expectation of 29.8. They reaffirmed their 2019 full guidance, so they came in line with their guidance as well. And Microsoft, with the gap up after the run up into the gap, it gaps up above those levels. What a wonderful, wonderful report coming from Microsoft. I'm going to give that two nice little stars on their earnings season, on their earnings report.
2 stars out of how many?
3. 2 out of 3.
2 out of 3. Okay.
Yeah, nobody got a 3 today. And I just made this up today as I was ranking kind of the earnings report. I gave UPS, 3M, and Tesla 0 stars. I gave Altria Group 0 stars. I gave Visa, CMG, Facebook 1 star, Lam Research, and Microsoft 2 stars. And I didn't see a 3-star. I didn't see one that just was a juggernaut with the triple whammy, beating earnings per share, beating revenue, and increased forward guidance. So we only, like on Lam Research, we really good on the earnings per share, really good on the revenues, but it came in line with their guidance. So Microsoft's earnings report, I just felt was just an absolute, it's what you wanted to see if you're a Microsoft investor. It's what you wanted.
So your ranking system, you had some good, some bad, and some ugly, and you mentioned 3M, and I think 3M is probably the ugliest of the earnings so far. And I mean, you gave them no stars. I would even
it was terrible.
I would even debit them 1 star. Like they owe us some money.
If you go negative, that's what 3M's, and we'll get into that. But I want to get Mark's take technically on Microsoft. If you have nothing on Microsoft, but you're talking about a company that is in a wonderful, wonderful, wonderful trend, how would you go about playing Microsoft here?
There's 2 ways to play this, and there are money ways to do it. And I don't even want to share them on a free marketing thing. I want to save it, but I will anyways.
Tim and I don't hold back.
We got a strong trend. We got a juggernaut type company. Now you're like, all right, I want to get in. All right. You do one of 2 things in this situation. You wait for a pullback to rising moving averages, or you play a break of intraday resistance. So wait for intraday resistance to form, 15-minute chart, hourly chart, whatever your cup of tea is. And right now, following earnings, it can be a little bit choppy, but you wait for those breaks of intraday resistance, or you wait for a pullback situation to rising moving averages. Both of those are money plays. They're very, very profitable. I mean, go to Disney. Go to Disney on the hourly chart. So, because we had this situation occur just a few days ago. So we got a runaway situation. Look at that really beautiful resistance area that formed. So we don't have the pullback, because what if 2 is going to happen? You don't get them both. So you got to be prepared for both. So we have a gap up situation on Disney, just like we did on Microsoft. And then you have a nice resistance area form that breaks out of that resistance area and then takes off. So those are the 2 ways to play a gap up situation on a very strong stock. Both of them can be very, very profitable. And you don't want to wait too long, because then you get in a situation like you are today at Disney and you're like, well, what do I do now? Well, you got to wait for the next setup.
Yeah.
You got to wait for the next setup now. So that's how you play these gap up situations in the strong stock. Short-term traders clean up. This can be your bread and butter in earnings season, waiting for one of these 2 situations to occur, either a pullback to rising moving averages or a breakout of resistance, and you can make a ton of money as a short-term trader.
Question from Stephen Johnson, and let me ask you guys this. Any halftime crew friends have an opinion on if I should get out of Qualcomm before earnings? I am in at 55, so big gain from the Apple News. Very simple, Stephen. If it's a trade, you never hold trade through earnings. That's number 1. You trade earnings strategies like strangles and straddles and inverted butterflies and debicons and the oh my type strategies from a volatility perspective. If it's a short-term trade, that breaks the 10 commandments of tackle trading when I came down from the desert last week. And one of those is you never hold short-term trades through earnings. So that would be breaking one of the 10 commandments of tackle trading there, Stephen. From an investor perspective, if you're an investor in Qualcomm, you're not going to get out of positions simply because earnings are going to be there. You learn how to protect them through collaring the trade or through buying a protected put option. And when you're looking at Qualcomm right now, and Qualcomm is completely overextended, there's no doubt about that. Qualcomm's going to have to wow on their earnings. They're going to have to really impress their investors on their earnings, which does give you a little bit more added volatility to the measure here, which means I would definitely look to collar the trade or protect the investment. If it is an investment, if it's a trade, no, we don't hold trades through. But if it's investment, given the price action we've seen on Qualcomm, expect some type of volatility. It'd be wise to collar the trade or protect it.
Owned it for 2 years. Looks like he's an investor in it. So it looks like
you don't get out. You don't get out. You do not get out of investments every quarter. You're just basically you're never capturing dividend, and you're always making long-term decisions by micromanaging the trade. Learn how to cash flow on it. Learn how to protect it.
Well, I feel like we've gotten a little bit deep in the weeds and kind of got out of order.
Real quick, Steven, go watch the Tackle 25 video system at Tackle Trading. You'll never have to ask that question again.
All right, I want to bring us back to the top of the market, and let's start with the S&P 500, work our way down. Getting through, as I said, we got a little deep in the weeds there, but we can always come back, look at the top of the market. All right, let's start with Mark. Mark, what's your take on the market right now? We had a lot of good earnings. We had some that didn't do quite well. Was looking for a catalyst to kind of get up to that previous resistance level. Markets instead coming back some. What are your thoughts?
I stopped following the news 2 weeks ago. I'm just trading chart. Go to the SPY. Go to the SPY. Short-term moving averages, and you don't have all the ones I use. I use 5 and 9.
You like your 590 EMA, right?
Yeah, and they've lived above them. They've lived above them. The 5 and 9 on the daily chart is a really good indication of where market strength is.
My EMAs.
Go to moving average.
I did. It didn't show it.
Exponential, right down there.
Oh, there we go.
And just put on the 9.
You just want the 9 and the 5?
And notice how it defaults to the 9 because they know that that's what the computers use. So Matt didn't have to go manually put in the 9.
It's the default.
The Thinkorswim software knows that the 9 is the default that the computers use. What happened today? When price came down to the 9 today, what happened?
Kissed it.
It kissed it, bounced right off. Because that is what computers are using. And as long as there's not real fear, as long as there's not some huge thing that, oh my goodness, this is actually real, causing real fear, computers own the marketplace when there's absence of real fear. And so when it comes down to one of those moving averages, it comes down, computers buy, sends price up. So as long as short-term moving averages are holding, I know the computers are in control. I don't have to know what's going on in the news. I don't have to know what's going on with people's mindset. I know when it comes down and kisses like that, there's zero fear. Computers are in charge. Wait for those breakout levels of intraday resistance. Get in again. This market is insane right now on how strong it is. It is absolutely insane.
Well, it's not even the strength, Mark. I mean, look at the consistency at the 9 moving average over the course of the entire rally here. I mean, let's just kind of look just in terms of this. Look how closely the market tracks that 9 EMA. You're really talking only 2 times in every consolidation period, in every pullback period, however you want to define that. In only 2 periods has the 9 been violated. And that was here at the very beginning of March, and that was here at the end of March. But outside of that, if you have just followed your 9, I mean, it's been wonderful. The consistency is so impressive.
Moving averages do not work well in sideways trending markets, but in markets with momentum, markets that are trending, they're absolutely insane at how effective they can be in judging pullbacks. Go to a weekly chart now. So you go to the weekly charts. I mean, go back to 2017. And here you have the 9 and 20. My favorite two, the 5, 9, and 20 are what I live on with short-term moving averages. Look at the consistency on moving averages whenever the 9 and the 20, look at how they constantly acted as support time and time and time and time again. Like right now, that's what we're experiencing in 2019. A market that is just relentless in moving average support on the way up at different time periods.
Well, you know, the signal I'm looking at here on these weekly charts, Mark, and you talked about the 2017 market, but if you even go back to 2 other very, very trending markets back in 2013 and 2014, look at the consistency here. Every time you get between that 9 and that 20, except once, right here, you had the October of 14 surprise. We had a little 10% drop in price, but outside of that, it was extremely consistent. and coming back now to today, I mean, the velocity of it is impressive, but you're still seeing that consistency factor, and now you're running into that top end of resistance when you look at the daily chart here. I mean, backed on, you know, I know, Mark, you don't like looking at the news, but I mean, when you do take into some,
I do like looking at news. I just think it makes me a worse trader.
Oh, I would agree with that, by the way.
I can watch news and listen to stock market news all day long.
But what I'm suggesting is that when you look at the economic news of today, okay, and you have a durable goods order today, and I'm going to show you guys the durable goods order just to kind of show you.
That was a really good order.
It was a fantastic economic report.
I'm surprised the market's not responding better to that.
Oh, it's so far overextended in the short term, but it's a very positive report. When you, oh, I got to get on. There we go.
There's no news.
Okay, so when you're looking at this report today and you see this durable goods order come in at 0.4 versus the expectation of 0.2, but the durable goods order that we're looking at here, 2.7 versus the expectation of 0.7 versus a previous number of a negative 1.1, which was revised to a positive, by the way. So not only was this negative number revised to a positive, you came in at 2.7% on the durable goods, which, and let me kind of break that down just really quickly here. Number one, it was the highest number in the last 8 months on durable goods. That's number one, 2.7 was. Number two, if you discount non-military, excluding aircraft, durable goods rose by 1.3, which is a very, very good number as well. The broader measure rose 2.7, which we just talked about. This basically, guys, just furthers the argument that when you're looking at every marketplace over the course of the entire world, the Chinese market, the Japanese market, the Australian markets, the European markets, the London market, the Canadian markets, when you're looking at every market over there, what market is doing better than the U.S.? And it just furthers that argument that we've seen over the course of the last 3-4 months, that if we're going to put our money somewhere, let's put it into the U.S. It's the U.S. that is really not showing the massive decrease in growth rates. It's Europe, and couple that. And I was telling Cody this earlier today, Mark. I said, Cody, I might start a segment every day and just start the entire halftime report is why is Europe burning down today? And even today,
why is the dollar awesome?
Why is the dollar awesome? That's what the segment's going to be called. Why is the dollar awesome? Because you can buy the #1 currency in the world and get paid a good little carry on it. That's insane, by the way, that we can do that. But when you're looking at the marketplace here today, you're talking about a marketplace that has really good fundamentals behind it in comparison, and this is very important, guys, in comparison to the rest of the world. I'm not saying the U.S. is the shining beacon of all things great economically today. That's not the case. But when we're looking at it in comparison to the rest of the world, and you're asking yourself a question, where are you going to put your money? I mean, my God, it would take me 2 seconds to say, give me the dollar, give me oil, and give me the United States. It's just
we're less than that to say Merca.
Merca. Yeah, that's Cody brings a great text in there. America. So you got some good information. I do believe most of the earnings reports we got today were also positive as well. I'd be surprised if we don't see a breakout here. Maybe not this week.
Now, real quick,
I'm almost getting to the point where I'll be surprised if we don't see 3,300
on the S&P.
I want to point out that tomorrow we actually have the advanced GDP. So with the levels that y'all are talking about right now, if that number
the advanced GDP number is not very important because we already got the preliminary GDP. So it's remember, in the GDP report they report 3 different reports. You have the preliminary, secondary, and then you have the preliminary, advanced, and then the final one. We already know kind of where our GDP was. So it's a matter of if it is revised one way or the other. So it's important, but it's not nearly as important as the report we got a month ago regarding the preliminary GDP numbers. So that certainly could be a catalyst. But overall, the economics of the day, the earnings of the day, this market does have a euphoric behind it, and it's for a reason. And I want to get your take on earnings overall, Mark, because it was widely expected for the first time since 2015 to have a recessionary decrease quarter over quarter on earnings per share, on earnings growth. Is that what you're seeing in the data?
Listen, I'm going to say something right now. Everybody's an idiot. You're an idiot. I'm an idiot. Cody's an idiot. Every financial analyst out there is an idiot. Everybody watching this show right now is an idiot. We're all relatively idiots compared to trends in computers and technical analysis. Like,
I like my analysis.
Well, I know, and it's fun, and it's good, and it's, like, I literally I become a better trader in the last 2 weeks. You know why? Because I stopped watching the news, and I just started trading individual patterns. I read the same things you read, that everyone was really concerned about this quarter. Mm-hmm. And the expectations were that we were going to actually have, what was it, a recessionary quarter for the first time since 2015?
It's since 2015. And I do want to make one quick point, Mark. I do agree with Maria. I don't buy into the 100% algorithm argument. I know you do. I don't. And you saw that on podcast when you and Tim put the concern of the algorithm at 10 and I put it at a 6. You still have to program the algorithms, right? You still have to program the algorithm.
I actually think they take a life of their own. Like, I think.
Well, that's just a scary thought.
No, I'm serious. I've read material on this where there's a set base in which they're programmed at, but that they adapt and they write their own programming.
Yeah, they're given a set of rules. Like, these are the 3 rules you have to live by, and then they can create their own code to, as they notice patterns that we don't. They
fine.
Can add in their own
that's fine. I get that, guys. I understand the argument. But for us to sit here and discount the importance of earnings and to discount the importance of economics and discount the importance of understanding how the news impacts price, I think we're a little too radical with saying it's all about algorithms. The only thing that matters
is not saying that at all.
Well,
what's your time frame? Because over 3 months, your analysis pays off. But if my time frame is 2 days, then it doesn't matter. It all is all a matter of what your time frame is. Let's say there's something bad in the market. Let's say something bad exists. Eventually, that's going to catch up, and people will become aware. And we see that in every bubble.
Again, I don't discount that. But when you have a company like Disney isn't being driven by algorithms right now, guys. Disney's not tracking moving averages right now. When you have earnings and 3M gets absolutely blasted because every investor comes out and hits the sell button because they come in at 2.23 per share versus the expectation of 2.50. Revenue comes in at 7.9 billion versus an expectation of 8.1 billion, and a 5% year-over-year decline in revenue. That was not algorithms that drove that price down. And the algorithms are not going to be able to catch up from a moving average to 3M for weeks and weeks and weeks, if not months.
On the 1 minute chart, they can.
Well, okay. If you okay. So basically, that's the argument. Then is that as long as you can just switch to a different time frame and justify the algorithm.
That's how smart they are. They're working all time frames at once.
Listen. I love the fact that technicals have become more consistent over the course of the last 10 years. They have. And that's a lot of the algorithms, guys, is creating the consistency of that 9 EMA that you swear to the holy altar of. That's the consistency factor. It allows us traders to have more confidence in the consistency of those situations. But you can't simply, as a trader, you can't simply say, all you have to understand is one scenario in the market and be successful long term, because there are scenarios like we've seen in the last 3 weeks. There are scenarios that throw off the algorithms, and we have to respond to those things. And so yes, the algorithms play a role in it. There is no doubt about that. Again, I'm not trying to discount that argument. What I'm suggesting is that you have scenarios that do happen over and over and over that throw off those types of situations. That's what I'm suggesting on it.
Well, I'm going to wrap this in and say let's go ahead and move on to the dollar, since we kind of mentioned it.
The only thing that keeps the show.
Yeah, I know, and I'm doing my best, but I mean, the two Justice brothers.
We'll argue about this all day long.
Oh, we're going to argue about this when the halftime report's over, and I call him.
Yeah.
Oh, that's perfectly fine. But
No,
until then, let's move on to the dollar and talk.
But hold on, Cody. I get it that we only
See,
want
and this is why it's hard to be
It's not
Tim.
going to happen. It's not going to happen because I get it that everybody just wants to get their analysis on whatever they want to think. But having this discussion is extremely important
Oh, I agree.
because you're getting into the mindset of traders and how traders approach the marketplace instead of just saying, okay, this gap, this did this gap. It's sometimes I feel like the halftime report we get a little redundant when we should go into the detail of the discussion in a lot of capacities so that we can get into the mindset behind what we're talking about. Now, onto the dollar after I said that.
No, I'm not done. No, but you think about it. No, like both, and here's what this is what I love about trading. You can come at it from an analytical, I'm going to break down the numbers. I'm going to use my God-given brain like Matt does and analyze and make your analysis on a stock, the market, whatever, and be successful. You can throw in the towel and say, no, I'm just trading 15-minute charts and I'm going to develop a system based on those 15-minute charts and computer signals and be successful. You can do none of that and just do volatility strategies around earnings and be successful. There is not just one approach to succeed at trading. And that's what I love about trading. What's your personality? How do you want to approach it? Finding that niche that fits you. And there's so many ways to be successful at trading. And I think Tackle Trading does a really good job of hitting different personalities with different coaches' perspectives.
I absolutely fundamentally agree with what Mark just said. There's many different ways to trade. I feel like if I understand the economic condition behind the technical condition as well as the fundamental condition, I have a better edge. That's how I feel. Now, does that mean my approach to the market is better than Mark's approach to the market? Absolutely not. Mark's system on the 9 EMA is a fantastic system. That's not what I'm suggesting. But let's move on to the dollar because I got some things to say on the dollar as well.
All right. Well, let's hear them.
look at Cody's. Cody's like, I don't even know what to do here.
I'm just like, all right. I'm gonna just toss in the towel. Let y'all just battle it out.
Dollar. Let's talk about the almighty dollar here, Cody, because we got some follow through on the dollar yesterday above 97.70, hit a high at 98.32 today. That breakout, in my opinion, that breakout's going to hold. Obviously, we got some economics next week that could throw a wrench into it, but I do like that breakout here. Cody, the euro continues to show some weakness and continues to show some weakness. But the one thing I'll say about the dollar right now, guys, if you're trading the dollar from a swing trading perspective, I love the breakout here, but you have to understand that you are overextended in the short term from a dollar perspective. The most likely scenario is, again, a little bit of a high base with a potential breakout after that or a retracement. Let those moving averages catch up to kind of what Mark was talking about.
Do we have any historical resistance?
Oh, man, we do. We do. And if you drop this down into the weekly chart, you do have historical resistance right here at about 99. You also have a massive resistance right here at 101 as well, with 100 that's going to play a role. But my take and what I told Cody here is the target has to be pairing. The target has to be 100 here, but it's not going to get there in the next few days. It's going to take some time. Dollars and currencies don't move like that. But again, in this short term overextended, and the reason I felt like that, Cody, was when you look at a lot of these other currencies, the Australian dollar sitting at a support level obviously could be broken. And if it does, keep an eye on the Australian dollar going down if it does confirm and break underneath 70. But you've already moved 200 pips into that potential breakdown. More than likely, we're going to see a little bit of consolidation before it eventually breaks down. When you're looking at the euro obviously just broke, and that's extremely weak right now on the euro. If you had to put it on a yardage marker right now, I'd put the euro down at like a negative 15.
Negative 10.
Yeah, literally. The target has to be down around 110 on the euro. You look at the pound, just broke that 130 level as well, showing a little bit of overextended, showing a little bit of slowing momentum here, coming down near a support channel there at 1.28 on the pound. You're looking at the New Zealand dollar here, overextended, showing a little slowing momentum inside candle. That is called a bullish Harami type candle. More than likely, we should see some level of appreciation coming back on the New Zealand dollar. The US dollar, Canadian dollar just broke out. As long as it holds its breakout channel right there at about 1.3460, you should be slightly bullish on the dollar versus the CAD. Dollar versus the Swiss franc. This one is and this one's concerning to me, guys, and I want to be very, very clear. If you're trading currency, the Swiss franc are having a speech. The Swiss National Bank president is having a speech at about 4 a.m. I want to say Eastern Standard Time. And the Swiss, whenever they come out with announcements or speeches, I always get a little cautious here, a little cautious with what the Swiss do. But the Swiss franc, the dollar is completely overextended against the Swiss here. You should expect a little bit of a pullback. And what you're seeing across the board is other than the US dollar, Japanese yen, which they reported monetary policy last night, but you're seeing all the other currencies a little bit overextended against the dollar overextended on the dollar index. That gives me a little bit of fade action coming at us, maybe a retracement coming back down. So I'd be a little cautious on those dollar trades coming into the weekend. They're a little overextended right now.
Absolutely. The main word kept using, I'm just going to reiterate over and over, was, pullback, retracement. I mean, it does. All these currencies that are run like they did, they need to take a breath, whether that be a high base or a pullback. But a breakout pullback is my personal favorite. So I hope that happens.
Remember what I said last week in the halftime report. There's only been 3 times where you've had such massive consolidation in the last 15 years on the dollar, like we've seen over the course, where volatility has subsided so low in the dollar that you just didn't really have a lot of price movement. Every one of those scenarios, when they broke out, the dollar moved about 10%. So keep an eye on that. And if we do see that dollar start to rise, and it obviously is breaking out here, you should have some really good opportunities on the dollar over the course of the next month, 2, 3, 4 months. So don't chase the dragon here. Mark down your notes there. Don't chase the dragon, but let it consolidate, forming a high base. Let it pull back, forming a retracement. Then you can pound it.
All right, let's move on to oil. Let's get your thoughts here, Mark.
It's been a relentless trend. Just once again, there's my girlfriend, the 9.
With momentum,
look at the pattern that developed heading into this week. It was such a beautiful pattern, and we talked about it on the commodity report this week. We talked about it at the halftime show. We talked about it at Traders Lounge, all throughout our pro product. Heading into this week, you had a really nice trend. You had that 9 holding a support and had a beautiful horizontal resistance level to identify the breakout level again. Amazing technical pattern set up heading into this week, and those short-term traders once again caught advantage of it. Oil has been a cash freaking cow the last couple months.
It's a juggernaut.
Like, just beautiful. I mean, not just has it went up, because that's not what I'm talking about. It's produced beautiful patterns, clear horizontal resistance levels along the way to make you able to identify and determine where you were going to play the breakout trend. I mean, look at that 9. Go back, go find the last time it closed below the 9.
Yeah.
What's it been?
Closed once a month ago, another one 2 months ago. How many times do you have to see the same thing on oil to be like, yeah, I can trust that, guys? I mean, we've been talking about this for two bloody months now.
It's been beautiful.
Oil has quick price appreciation, consolidates, forming high bases, and then you always trade the breakout on oil.
High base patterns are amazing. Like, if you want to learn one thing this weekend, say like, hey, I'm a little overwhelmed. I don't learn how to trade high base patterns and make it if this market keeps trending, whether it's oil or
it will be the number one pattern if this market keeps trending.
High base patterns are going to be your cash money machine.
They're also one of the most bullish signs in a trend is when markets don't retrace back down, but just simply consolidate at the top end of the channel.
Highlight that high base pattern that formed last week heading into this week, just so we go back to the start of the week and go back like 3 or 4 weeks on the time frame, just so we can see it and so we can talk about it. So we have an uptrend, and all a high base pattern is that you're in an uptrend and you take a few days off. stocks, futures, nothing goes up every day. Sometimes they need to take a breather. And so all a high base pattern is that you have an existing trend, and then you just have sideways action for several days, where you can clearly identify where that resistance is. It's taking a little breather. Go to CMG. I mean, we could talk about high base patterns for all day long.
Well, CMG had earnings today.
I know, but go back to the previous opportunities in the high base.
Right there.
Like
right there.
You will see those high base patterns. So CMG had a high base pattern. It broke it and went up $80. Like the amount of money you can make
out there
on high base patterns is insane. Absolutely learn how to trade high base patterns, because if the market continues to go up, you will make a ton of money, and you will look back on April 25th, 2019 and be like, I don't remember exactly who told me, but I'll remind you. I will remind you who told you many times.
It was just that really loud, angry Justice Brother.
High base patterns are amazing. So whether it's oil or CMG or the hundreds of patterns you will see if the trend continues, high base patterns are absolutely amazing.
No, they're one of the, and honestly, Mark, they're one of the easier triggers.
Oh, they're so easy.
It's just a simple breakout pattern. You just simply apply whatever rule you have on breakouts, and you put your order in there, give a nice little OCO bracket order to control your target and your stop. But you know, oil's been one of the better tradable instruments, and honestly speaking, one of the more consistent tradable instruments in year to date. I mean, we're talking about a commodity that's up 34% year to date, and it does not look like it wants to stop here. So keep an eye on that potential breakout there as well, Cody.
Now, with the market making high bases, oil making high bases, we actually have the gold and silver looking, the opposite. Look like they're making a couple low bases, and I know we've talked a lot of times that we may short it, don't necessarily short the dollar, or don't necessarily look to buy the dollar unless you're buying physical right now. But this is looking like a reversal into a very bearish chart. What are your thoughts on gold?
No, it's been reversing for 2 months. It's already reversed. It's bearish downtrend.
Yeah, and so now we have this low base forming.
Well, any upward movement in price is going to be met with resistance, right? So
there's no way gold can take off with that dollar breaking out.
No, I mean,
it can find stability.
Well, I mean, here's what's going to drive gold bugs crazy. Watch the dollar retrace over the next 3-4 days. The gold bugs get a trigger above 1280 on gold, maybe 1290. It runs into some moving averages right when the dollar finds support and just crushes everything. Right? There's no buy here.
And this is where Matt's approach to investing, where you go in depth and understand what's happening. You understand what's happening with the dollar, and you understand how strong it is against other currencies, things that a chart might not be able to tell you. And so gold is going to have a really hard time with the dollar rising, no matter what your short-term signals are.
Yeah. Well, and one thing you got to understand about the difference between markets, yes, I do put a little bit more emphasis on intermarket analysis, but my time frame is also a little bit longer than Mark's is.
My time frame is the amount of time it takes me to finish this sentence.
Exactly. So Mark doesn't care about anything like that. Whereas, when I'm doing a lot of covered calls or a lot of longer term stuff, or even my swing trades are typically 7 to 10 days, I'm going to put a little bit greater emphasis on intermarket analysis than, say, other traders and other investors will.
And that's a really, really important point, actually.
It really just boils down to time frame.
I still think they're going to do a QE4 at some point. And so I still am looking to add gold, because it's boring. I don't have to hyperly manage it.
They're not going to do QE4 until they go to a 0 interest rate, and then they'll do QE4. And then when that doesn't work, then they'll do a negative interest rate like Japan.
Wants to do QE4 now? Markets hit all-time high. Hey, let's do QE4 right now.
Oh, no, please don't put that out there.
I will die a slow death if that happened.
Please, please don't. No.
The halftime report will be taken over by Mance rants on central bank monetary policy and modern monetary theory and you name it. So let's pray that does not happen. for all of us.
Absolutely.
For all of us.
Well, we made it all the way to the end, and I forgot to ask for likes and shares during the halftime point. So I'm going to ask for them now, guys. Let's get the likes up. Get the word out there. Share this. Let a friend know. Hey, every day I'm watching the halftime report.
To be fair, 25 likes against the average of 70 that June was only a 21% retracement, which would fit what we've been talking about, which is more of a high base and a nice little Goldilocks bullish retracement. Listen, so let's get those
likes. If they retrace, will hit the 9 EMA and bounce off of it. All right.
Well, our likes just hit the 9 EMA. Let's go ahead and buy those likes there, guys. Ellen, there are no dumb questions. Dumb question: when you buy gold, what are you buying? Is there really a pile of gold backing up your investment? Ellen, yeah, you can buy physical, you can buy paper. There's a lot of different ways. We at Tackle Trading, our partner Zainers out of Chicago, that is where we buy our gold. So if you're looking to buy gold, silver, or any physical metal, the broker and guys, finding a trusted commodity broker is important. I've known Matt Zainer and the Zainers for close to 15 years now, and they're Pete Thomas. You guys have heard Pete Thomas on the podcast. He's one of the best commodity traders I've ever met. He was on the Chicago Mercantile Exchange for years and years and years, and now he's a commodity broker out of Zainers as well. And if you've ever listened to Pete Thomas, you'll see why we like the Zainers so much. So you can find Zainers link on the Tackle Trading website at the very bottom where it says partners. So just go ahead, and if you want to support Tackle, obviously we like you clicking Zainers through Tackle Trading. So definitely support Tackle, support our partners. We picked our partners for a reason.
So I got a quick little story about Zainer. So the very first time I bought some physical metal, and I buy everything through Zainer, it was I think it was five bars of silver, and when the mailman showed up with it, because it had to be signed for, he was like, I don't know what's in this little package, but my God, it's heavy. And this thing is insured out the wazoo. And I was just sitting there laughing, thinking like, man, Zainer, they're going to make sure that even if that little package is lost, they got you. They're going to make sure that it's insured and you get your money.
And they can ship it to you. They can store it for you. They have, I believe they have big old safety deposit boxes and safes out of, I want to say Providence and maybe DC, New York, but they can store it internationally. They can store it within an IRA if you want, and I'm talking about physical. So Zainers, they are a full service commodity broker, and they can help you with any of your precious metal needs, including storage or shipment.
Absolutely. Well, that looks like...
When my mom wanted to buy silver, we sent her to Zainers, and she's like, well, what do I do? And I'm like, no, just call. Tell them you're Matt and Tim's son, and just, they'll take care of you. And they took care of him. Oh, and Pete's stories, James. Oh, my God. Anytime Pete talks, I just shut up and listen because he's funny, he's humorous, but he's just got so much experience in the commodity market, no doubt. Cody, send us out.
All right, guys. Well, thank you for being
Cody, I'm going to interrupt you again.
Thank you. Thank you for that, Mark. Well, guys, seriously, thank you so much, Halftime Crew. Always out here watching us do this live show for you guys. We absolutely enjoy it. And tomorrow we will be here for Friday Fun Day. Mark will not because, he hates Friday Fun Day. But until then, guys, we are out.